Well, I'm sure you will find it very much worthwhile to delay lunch slightly. We're actually a little ahead of the schedule, as Mark mentioned, because we had one fewer business plan than we had originally planned for. So to take advantage of that opportunity, it's really a rare privilege for me to introduce someone like Per Wimmer, who is a person with a broader background than I have encountered in quite some time, and it emphasizes the international character of our summits. Per is a native of Denmark, and he is a global financier, an entrepreneur, an adventurer, a pioneer, and a philanthropist. He owns and runs Wimmer Space and his own investment bank, Wimmer Financial. His investment bank specializes in global corporate finance, shares trading, real estate, and oil services. Per is expected to be the first Dane in space. He has already signed up for 3 trips on various flights. But he's not waiting for those flights in order to get off the ground. In 2008, he was involved with Ralph Mitchell in the first tandem skydive over the highest point on Earth, Mount Everest. So Per does definitely get off the ground. Prior to founding his own investment bank, Per was advising on equities to MF Global Man Securities, which was associated with the Mann Group before the spinoff, and also with other prestigious firms including Collins Stewart, Goldman Sachs, and McKinsey. Per Wimmer.
Thank you very much. I realize we got to be short and sweet here today because lunch is just around the corner, so that's exactly what we're going to do. The purpose of this is just 2, really. Number 1 is to give you an update on the capital markets and the appetite for risk as it is right now, in particular with an international viewpoint, i.e. from London, where I'm based. And number 2 is just to leave with those entrepreneurs in the audience some useful criteria, ideas, some of the things that we look at when we look through various business plans and when we look in our investor base to help you financially get off the ground. Those are the 2 brief things I'll go through today. I have to show this disclaimer, unfortunately. That's very quick. We can skip the first bit. Yeah, so I have to, otherwise I get trouble at home. Wimmer Financial, you talked about Paul. I won't say too much about it, but we are very much involved in we prefer companies that are late stage or indeed already listed on the stock exchange. Within Wimmer Space, I'm the first person to go to space with X-Core, so I'm very delighted and excited to hear about the great progress, and it's good to see that just another $1 million and then off we go. I'm also founded with Virgin Galactic, and I've also got a ticket in with Space Adventures. Within Wimmer Space, we also try to help and promote charity work, in particular to get kids excited about space. The point of the update from the capital markets is kind of illustrated a little bit in this chart. As you can see, in the general stock market, there's been a massive development from the Lehman bust about a year ago until where we are right now. And the reason why I'm showing you this chart is because you can see this sort of violent behavior. Now, the sentiment amongst the investor community in Europe has changed a lot accordingly. Now, ideally, if you are an investor, you would ideally like to pick the little low point, as you can see right there. That's where you ideally would like to get in. The trouble, though, is as an investor, you tend to shy away from that point, because at that point, you can't see, you don't have visibility, you can't see what's happening around the corner. So therefore, capital is not necessarily very available at that point. It's very easy to be wise in hindsight and say, well, that's exactly what we should have invested. It doesn't happen like that. So therefore, we found it very difficult to do deals at the low end of the market. We did some, but not the ones we wanted to. So that's the bad news. However, the good news is that if you look at also, look at the NASDAQ, it's even more, you see this sort of violent behavior there. The good news in that respect is the following. Number one, confidence is back. We think the bottom has been reached. And that changes everything, because that means that risk appetite comes back in again. Within some of the more risky sectors, mining, financial services has become a risky sector, but also within space, which is a high beta sector. So that's the good news. So there's a slight delay in terms of what's happening out there in the global equity markets in terms of the capital actually being available to space right now. But it's there. And I would argue there probably hasn't been a better time to start a business within space than right now. Why? Well, capital is becoming available again. We have risk appetite coming back in. Talent is available. You can identify talent and find talent and attract talent. We're attracting talent. We're growing our business in Europe right now, and we're finding that it's relatively cheap to attract good talent at the moment. So we haven't been busier than, or we're busier than ever trying to build up, because now is the time to do just that. Just very briefly, look also here just across the world. You can see, look at Brazil, for instance, is up more than 100%. That means also that a lot of people have made a lot of money. Yes, there was a lot of bleeding last year, and yes, there's a lot of risk, and there still needs to be offloaded, and yes, there's still a lot of pain that needs to come out through the system, in particular if you look at the banks. But there's also a lot of wealth creation taking place right now. And if we look just on the short to medium-term outlook from here, it also means that the interest rates are likely to stay low for some considerable time. That means also that the capital ought to be cheaper. Bond yields are falling, stock market is going up, and we've just seen it. And you've got falling credit spreads as well. So therefore, the financial conditions as such are good. So that's that's very good news, and therefore it's a really good time to be busy, in particular as one is engaged in the space business, because risk appetite is there. So don't miss the boat. It is different, though, from the credit crunch. The bar amongst investors has gone up. So one has to be a little bit more savvy in terms of what one presents as an entrepreneur. Early revenues, cash flow, all sorts of de-risking has to go into the business plan. Whilst 24 months ago, we could have a situation where blue sky scenarios were fine. You know, projects that were sort of startups in the billions kind of looked interesting maybe, but now they're definitely a no-go. It's much better to have a bird in the hand than 10 up in the tree. And therefore, it's important to look at the cash flow, get some early business in. Like we've seen today, I think it's very interesting to see that the quality of the presenters today, compared to some of the previous investment summits, have actually gone up, in my view, significantly, because there's a very realistic focus on revenues, on cash flows. We saw it with Celestis when they presented just a minute ago. We saw how they actually have already revenues coming in. There's a very concrete financial analysis that one can do on that and do evaluation. Does that make sense or not? I think that's very good to see. The slightly bad news is there are still some of the high net worth individuals out there that are less high net worth than they were before. And that means that it's a little bit harder to identify some of the friends and family and the high net worth that are necessary to carry the early space propositions off the ground. So it takes a little bit more work, or it does require that one knows some of the ones that survived the fall of last year. There's still a lot of bleeding that needs to come out of the system. What would I do as a space business planner, as it were? I would focus a lot of de-risking in the form of off-take agreements, i.e. finding out who can actually, where can you actually pre-sell something, getting some early revenues in, or getting some commitments from key customers. That's absolutely key. Don't go to the banks, they won't lend these days still. There's still a lot of balance sheet issues, but equity risk is back. So private equity is back, and those with those individuals with liquidity also tend to put money on the table. Green investments obviously is a big theme, so if there's any way one can incorporate the whole green aspect of it, I think that's a good thing. It rings a lot of bells these days. I think personally this could be the next .com, to be honest, but there's still a lot of risk appetite if there's a green angle to it, so don't be afraid to include that. Failing that, or if one has problems identifying sort of the traditional private equity route or something, and it just takes longer, there is another route as an entrepreneur. And one route is to develop one's space concept. If it's a consumer-related business, try to promote the idea, build up the whole business plan around it, and then instead of trying to run around and scrambling for $1 million or $500,000 or whatever the number is, team up with a big corporate outside the space business and sell the concept to them, get a royalty payment as the business develops, and also get an upfront payment. That means that they take the risk, you don't. You get the money. A couple of other very short pieces of advice in the very end. Get a good cornerstone investor in. That always is a good tick of credibility. It also is very helpful because it does provide the de-risking in terms of your business going forward, because you won't be financially bust. Or, like I said before, get some pre-commitments from customers. Nothing is better in the eyes of an investor to actually have sales or pre-sales, even if it's soft commitments, that is okay. But it means that we can actually analyze and we can sort of see the visibility on the revenues coming, as opposed to pure, this is a great story, good luck. Focus on cash flow, and then just get going, get on with it. You know, it's the best time right now to be busy, to building up businesses across the spectrum. Keep the costs low as you can, and then focus on the validity of the financial analysis behind your business plan, as opposed to just telling a good story. It's important to have the good story there, and we've seen a lot of good stories, and I'm sure we'll continue to see a lot of good stories, but you also gotta tell a good financial story. And a good financial story is a story where there's revenues, there's early cash flow, even if it's small, that's okay. And then we can take the blue sky whenever that comes around. And then most importantly, believe in the business yourself and have fun doing it. I thank you very much for your time.